Good afternoon. This is Marvin Appel, editor of the Systems and Forecast Investment Newsletter, back with Anne-Marie Baiynd at the 2018 Chicago Traders Expo, talking about how she trades her futures account as a professional futures trader who makes a living at it, making you a member of a rarefied and successful minority.
Thank you very much.
So you talked about something that in the first segment about the importance of defining your support level if you're taking a long trade. So you know, wait for support, wait for what looks like support, wait for it to be retested, and then you can start thinking about chasing the trend if there's a follow-through bounce. We didn't talk yet about how you set your profit objectives. If you have a successful entry, what are you looking for to close out your trade?
Good. I like to look for really the last place that sellers started to show up. That'll be the first element that I look at. Now, most folks will look for a breakout, and so there'll be some folks looking at that space where I'm looking to take some profit. They're looking to get involved.
Right.
And so there's always the element of, well, how much participation is going to be up ahead? Am I looking in a prevailing trend? Is it giving me some upside? Should I leave myself exposed for future moves that might give me a little bit more? So I'll really end up taking profit a lot of times in those spaces at resistance, and then look to see if there's additional participation to leave a little bit on, because again, trading for a living means that the number one thing you do is focus on the risk event.
Right.
And certainly for someone like you that has a service where you're caring for other people, you know that risk is the number one thing that you focus on in terms of keeping that nice and tight for folks in that space. And so really, to do that professionally, that's the key reason anybody survives. I really believe that. So that's what I'll do. I'll take a little bit off, and then I'll raise the stop up, and then I'll look at the next level of resistance. Now, a lot of times people say, well, what if it's an all-time high?
Right.
What if it's moving higher? I will draw Fibonacci. I love Fibonacci's.
Okay.
And so my thought is I will project Fibonacci, and if it's upside and I keep making higher lows, I'll wait until I get that level. If it starts breaking down on me, it's time to go.
Oh, this sounds actually very logical. So you
Yeah,
enter at demonstrated support, and then when you enter a trade, you already have in mind what your upside objective is, usually based on previous resistance. But if it's a new high, you'll use a Fibonacci to project where the resistance will fall.
Yeah.
And what's your assessment of the U.S. equity market? You say that the S&P 500 futures are one of your favorite trading vehicles. So we have a high from late January. Is that still a serious upside projection for you, or how do you read the U.S. market now, equity market now? Today
actually was pretty important because we fell down into a fairly strong support level. It's around 27.94, something like that, and it looked like it was going to head lower. But those buyers came in and propped it up, and I think we closed, the E-minis closed at maybe 28.11 or something like that. So that to me is fairly good upshot. I am thinking that if I pull back, as long as we hold our 27.96 to 27.94 area, we're still making higher lows.
Right.
And higher lows tell me that the buyers are making that stair step into the next space of value, where they go, you know what, it's worth it to keep buying at this price. And essentially that's what support ends up being, right? It's the value area that we've all come to and said, yeah, I'll pay that for that. And so that's really what we did today, and we're holding up into resistance levels that I certainly am. Tomorrow when I'm at my desk, I will be looking for a higher low to participate.
Okay, so you're near-term bullish, but again, as a day trader, that could change on a dime. But I agree with you. I think for months now, the stock market has had many opportunities to go lower and has declined to take them. So
buyers are relentless in the space.
That is a good thing. How do you recommend our viewers size their trades?
Well, back to risk.
Right.
And a lot of times, in the futures market, we're allowed this magnificent leverage.
Yes.
And depending on who your broker is, you could actually end up getting even more leverage in certain spaces. But overall, I would say, if you're going to look at trading in a space and you really want to manage how you're looking at yourself, let's say somebody picks a risk event of 5%, okay? If it were straight across the board 5% of your amount, whatever your total amount is, and you left that steady, you'd only have 20 days before all your money was gone.
Right.
So I like taking those aggressive downside interpretations of what should my risk be, because a lot of us don't really think about that risk. And I know I've harped on it and harped on it and harped on it, but the goal is to learn the markets well enough and stay in long enough and not lose money. And so a lot of us really end up losing all our money before we really learn how to manage that space.
Right.
So,
and how long have you been trading for a living?
15 years.
Very nice.
Yeah.
Okay, well, we are unfortunately out of time, but would you like to tell our viewers where they can find out more information about your trading coaching, the books you've authored, and the services you might provide?
Thank you so much. It's thetradingbook.com. You can also email me at info@thetradingbook.com, or you can find me on Twitter at Anne-Marie Trades.
Well, thank you very much, Anne-Marie, and thank you for joining us, joining me, Marvin Appel, at the 2018 Chicago Traders Expo.